Ladies and gentlemen, Kiki here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down, actually up about 0.5% there. On the S&P Nasdaq, down up a little bit. I actually didn't expect the market to be up. I was looking at the market this morning to do. I'm just opening up my e-signal here and checking out the market. Anyway, semiconductor flat, Dow Jones up a little bit. Russell 2000, transport, and the banks. These guys are red today. Energy up 1.3%, along with the biotech. Healthcare made a move 2% positive. Utilities and home builders are down a little bit. Retail up a little bit. Emerging market down 1% there. Gold, silver minus, and the Bitcoin is up today, about 0.5% or so. Dollar up, oil flat, treasury bond down, VIX is down a little bit. Let's stick with the S&P 500 ETF. Spider, 65-minute chart. Here's so this is where we closed yesterday, and we opened up right over here. It looks like we slightly gapped down. The down gap was filled quickly, and then looks like on the second hour came down. We talked about the 443 level being the support, right? We talked about the fact that the bears needed to break below that, continue to push because you let the bulls hang around. Well, this is what the bulls are going to do today. And so 443 was never cracked. The second branch, the bear troops, was not able to protect and keep pushing it down. And bulls came up here, counterattacked, and filled about 90% of that down gap. Well, 90% is better than nothing, but it would have been better if bulls would have filled the entirety of that down gap. And so you can see when the gap wasn't fully filled, it's gonna act as resistance. That's why we see that tail. And we do have a textbook shooting star candle that looks like this right here. So what do we know about shooting star candle, right? Well, shooting star candle is when we get to the level, resistance level, when the price gets rejected, what we're going to see that long upper tail and then a small body right here. And this is definitely a resistance level because bulls got up and demolished that second branch. The bears opened up, and these little troops of the bears were panic mode, but they were able to, reserve about 10% of the real estate there. So that's they're hurt with that, but that's better, I think. We have a little bit of that left. So what bulls need to do, obviously, they got to get back up here and finish the job that wasn't done completely today and fill that remainder of the down gap. But let's talk about the shooting star candle there. Well, for any kind of candlestick analysis, what you do need to see is a follow through. So if we do see a follow through at least 2 hours of tomorrow's early morning session, I can see that the bears are going to come back down to retest 443. And bears might try one more time to break below 443. But obviously, we do have 447 as the micro-term support. That's the prior resistance level, which could potentially act as new support. So what the bears need to do, not only they need to see a follow through from this shooting star candle, we're talking first 2 hours, they need to break below 447 and stay below for the first 2 hours tomorrow morning session. And there's a good chance the bears will come down and retest the 443. If they can't do that, bulls might go up here and they are going to try to finish the job that wasn't finished today. Keep in mind though, my short-term moving average is still, as of today, supporting the bears, you see. So you can see that long upper wick, bulls trying to get up, not able to stay up, and then they close where? Below my short-term moving average. However, my micro-term has been kind of flipping back and forth, right? Here's supporting the bears, here's supporting the buyers, supporting the bears, potentially supporting the buyers yet again. So that micro-term can't make up its mind. It's wanna be bears team, wanna be bulls team. It's been flipping back and forth. It's not really trustworthy at this time just because it's been doing that too many times last couple weeks. So let's check out that oscillator and see if we can extract any more information. Here's the information we've been talking about yesterday. And this is the one thing I told you, bears, not to make this happen. What did I say yesterday? If we do see a bounce tomorrow, which is today, if you don't let this oscillator continue to down or bring it down, what's going to happen is if we do see that cross, and this is a one thing bears did not want to see, and this is a one thing the bulls wanted to see. What is this? This is a bullish divergence. This is slower high on price section. We have the higher low in the price section. What had happened in the past when we did see that bullish divergence? Well, as you can see right here, this is actually not even that strong because this is equal lows. And then we got the higher lows. And do you guys remember what happened after that bullish divergence pattern here? What I'm going to do, I'll just do this so you guys can see it. So you can see we got this here, higher low on that oscillator. But we got the equal highs on the price section. This one actually has a lower low. So actually, this bullish divergence is actually, technically speaking, is more potent than this one. Remember, this is equal lows. This is a lower low. So if we see a lower low in the price action, well, you ought to see lower lows also on that oscillator. That's why we talked about yesterday that bears need to bring this down all the way to the bottom of its band. Well, they didn't do that. So now, bulls are cooking up something here. So only way bears can defend this is if they can keep this 10% of this down gap that is opened up, right? If bears can somehow protect it and utilize that short-term moving average, right? Your short-term moving average to never, next couple of days, tomorrow, next week, early next week, don't let the bulls get above the short term and go up and fill this gap. Because if bulls do that, man, this is a strategy right here. They're bringing out some big guns right now. Buyers are bringing out some big guns right now to fill the. Buyers are going after the boss bears. Buyers, they don't even care about these little troops right here. They're going after the big boss bears. All right, so. But follow through is important, right? We do have an initial cross on that oscillator. And as of today, that oscillator is favoring the buyers. Can we see extension? Can we see advancement tomorrow? I'm going to come back for you. We'll reassess the situation. Enjoy your evening and good luck training tomorrow.